Did you know that in 2025, a staggering $200 billion in global trade has been upended as 8 major economies pivot away from the US and forge new alliances with China? That's right. President Donald Trump's aggressive tariff policies have sparked a seismic shift in global trade, pushing countries like India into China's orbit and threatening the US's economic dominance. Buckle up, because today we're diving into this shocking trade war, counting down the 8 countries turning their backs on the US, and unpacking what it means for you, the global economy, and the future. From skyrocketing tariffs to unexpected alliances, this is a story you need to hear. Let's start with number 8. Let's kick things off with Mexico, a key US trading partner and part of the ASEAN trade agreement. In 2025, Mexico's trade relationship with the US has taken a hit due to Trump's sweeping tariffs, which slapped a 10% baseline reciprocal tariff on all imports, escalating to 25% for countries with significant trade deficits with the US-Mexico, heavily reliant on exporting goods like automobiles and agricultural products to the US, faced a dilemma: absorb the tariff costs or seek alternatives. Enter China, which has been aggressively expanding its influence in Latin America. In March 2025, Mexico signed a deal with China to boost exports of electronics and automotive parts, capitalizing on China's demand for these goods. This move wasn't just about economics, it's a strategic pivot. Mexico's leaders, wary of Trump's unpredictable trade policies, are hedging their bets by deepening ties with Beijing. This shift has already disrupted supply chains, with US consumers facing higher prices for everything from avocados to car parts. Mexico's pivot signals a broader trend. Countries are rethinking their reliance on the US market. Next up, Canada, another ASEAN partner, finds itself in a tricky spot. In June 2025, Trump terminated trade discussions with Canada after it implemented a 3% digital services tax on US tech companies, prompting threats of additional tariffs on Canadian goods. Canada, which exports 75% of its goods to the US, faced immediate pressure. Rather than caving, Canada turned to China, signing a trade agreement in July 2025 to increase exports of lumber and energy products. This deal, coupled with China's relaxed tariffs on Canadian goods down to 10% from 125% in a temporary truce, has made China an attractive alternative. The US has responded with a 20% tariff on Canadian imports, citing fentanyl-related concerns. But Canada's pivot is already reshaping North American trade. For example, Canadian lumber prices in the US have spiked, hitting construction companies hard. This move shows how even close allies are diversifying away from US dependence in 2025. South Korea, a tech and manufacturing powerhouse, lands at number 6. In March 2025, South Korea joined China and Japan in a trilateral trade meeting to counter Trump's tariffs, which hit Korean electronics and steel with a 25% levy. South Korea, known for brands like Samsung and Hyundai, has been a reliable US ally, but Trump's policies have pushed it toward China. In May 2025, South Korea signed a deal to supply China with semiconductors and electric vehicle components, bypassing US tariffs. This pivot is significant. South Korea's exports to China surged by 15% in the first half of 2025, while its US exports dropped 8%. The ripple effects: US consumers are paying more for Korean-made TVs and cars, and American tech firms are struggling to compete without access to affordable Korean chips. South Korea's move underscores a growing reality. Trump's tariffs are alienating allies and boosting China's tech dominance. At number 5, we have Japan, a long-standing US ally that's now rethinking its trade strategy. In 2025, Japan faced a 25% tariff on its steel and aluminum exports to the US, despite earlier negotiations that seemed promising. Frustrated by Trump's hardline stance, Japan joined China and South Korea in a trilateral trade agreement in March 2025, aiming for a free trade zone that excludes the US. Japan's exports of cars and electronics to China have since jumped 12%, while its US exports fell 5%. This shift has hit American consumers, with Japanese car prices in the US rising by 7% in 2025. Japan's pivot isn't just economic, it's a signal that even staunch US allies are seeking stability elsewhere. China's willingness to lower tariffs on Japanese goods to 10% has sweetened the deal, making Beijing a more reliable partner than Washington in this new trade war. Brazil, the largest economy in South America, takes the number 4 spot. In 2025, Trump imposed a 50% tariff on Brazilian goods, one of the highest rates, accusing Brazil of unfair trade practices and buying Russian oil. Brazil, which exports soybeans, beef, and iron ore to the U.S., faced a tough choice. Instead of bowing to pressure, Brazil deepened its trade ties with China, signing a $30 billion deal in August 2025 to supply agricultural products and minerals. This move has already disrupted U.S. food supply chains, with soybean prices spiking 10% in American markets. Brazil's pivot is also strategic. By aligning with China and India, it's building a coalition to counter U.S. economic pressure. The fallout. American farmers are losing market share, and consumers are feeling the pinch at grocery stores. Brazil's shift highlights how Trump's tariffs are pushing even non-aligned nations toward China. Switzerland, a neutral financial hub, might seem like an unlikely player in this trade war, but it's number 3 on our list. In August 2025, Trump's tariffs hit Swiss pharmaceuticals and precision instruments with a 25% levy, prompting Switzerland to urge Washington to reconsider its trade brinkmanship. Instead of waiting, Switzerland turned to China, signing a trade agreement in July 2025 to boost exports of medicines and machinery. China's reduced tariffs on Swiss goods from 125% to 10% made this an easy choice. The impact? U.S. hospitals are facing higher costs for Swiss-made drugs, and American manufacturers are struggling to source precision tools. Switzerland's move shows how even small, neutral countries are realigning with China to escape U.S. tariffs. This shift also strengthens the Swiss franc, a safe haven currency, which has surged 10% against the dollar in 2025. India, the world's most populous nation, takes the number 2 spot with a jaw-dropping $200 billion trade disruption. In 2025, Trump slapped India with a 50% tariff, 25% baseline plus a 25% penalty for buying Russian oil, after failed trade talks. India, which had hoped to double bilateral trade with the U.S. to $500 billion by 2030, was stunned. Instead of yielding, India pivoted to China, resuming trade ties and working to resolve a long-standing border dispute. In August 2025, Indian Prime Minister Narendra Modi met with Chinese officials, paving the way for a $50 billion trade deal focused on electronics and pharmaceuticals. India's trade deficit with China hit a record $99.2 billion in 2024 by 25. But this new alignment is strategic. India sees China as a counterweight to U.S. pressure. The fallout. U.S. consumers face higher prices for Indian-made smartphones and generic drugs, while American exporters lose access to India's $1.4 billion-strong market. India's pivot is a game-changer, signaling a new India-China axis that could reshape global trade. And at number 1, it's China itself, the epicenter of this trade realignment. In 2025, Trump's tariffs on Chinese goods reached a staggering 145% in April, only to be reduced to 30% after a 90-day truce negotiated in Geneva. China retaliated with 10 to 15% tariffs on U.S. agricultural and energy products, while imposing non-tariff barriers like suspending U.S. lumber imports. But here's the kicker. China's strategic outreach to countries like India, Brazil, and South Korea has created a new trade bloc that's challenging U.S. dominance. In May 2025, China reduced its U.S. Treasury holdings to $756.3 billion, the lowest since 2009, signaling a move away from U.S. financial dependence. The impact: American businesses are scrambling as Chinese goods become pricier, and U.S. exporters lose market share in Asia. China's ability to rally other nations against U.S. tariffs has made it the biggest winner in this trade war, reshaping global alliances and supply chains in 2025. So, there you have it, the 8 countries shaking up global trade in 2025. Mexico, Canada, South Korea, Japan, Brazil, Switzerland, India, and China. Trump's tariffs, meant to protect American interests, have backfired, pushing $200 billion in trade away from the US and into China's orbit. From higher prices at the grocery store to disrupted tech supply chains, you're already feeling the impact. But this isn't just about economics. It's about power, alliances, and the future of global trade. What's next? Will the US double down, or will these new trade blocs redefine the world order? Drop your thoughts in the comments, hit that like button, and subscribe for more deep dives into the stories shaping our world. Stay curious, and I'll see you in the next video.